Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of April the 9th, 2018. Now, to get started this week, we're going to begin where we always do with that all-important US dollar index. Now, the dollar coming under a little bit of selling pressure here, but the non-farm payroll number, in my respectful opinion, was not that bad of a number at all, but we're still not seeing any real heavy dollar buying here. Now, we're coming up against the key VantagePoint level, 89.62. However, in the short term, we're seeing that basically our short-term indicator is starting to move down with our neural index. Predicted medium term crossing the long term predicted difference is signaling that ultimately the dollar is likely to move lower after things kind of shake out on Monday here. So what I mean by shake out is that whatever the market does on Friday usually does the opposite on Monday. Kind of goes back and forth after a non-farm payroll, and then on Tuesday the real price starts to settle in for the week. Now, the dollar is indisputably bearish on the year against a number of different currencies, not all the currencies, but most. The commodity currencies have been under a little bit of pressure, but in the seasonality, that's perfectly normal. So when we look at this, we're in a very well-defined range here currently between the 90-60 level, the bottom end of that at 87.85, with very, very few US dollar buyers. When we look at Euro US going into next week, once again, we can see here that our critical vantage point resistance is coming in at 123.05. I would anticipate that area will be challenged next week and potentially breaking through that level as our shorter indicators start to rise. We can see our predicted RSI, we're starting to bottom and rise out here. I've drawn a trend line in off this particular RSI as it's starting to rise. This is a very repetitive signal on the dollar index. When we look at the short-term crossovers from VantagePoint, again is pointing to further likely weakness in the dollar. This should see the US Swiss franc start to move lower. Now, the Swiss franc is very highly correlated to Euro US, but also the global equity market. So if the global equity markets keep moving lower, more specifically if the S&P does, that will drag this pair down as the euro will benefit from this. But once again, my optimism on that remains heavily guarded here. Overall, the US Swiss franc has been very bearish on this particular calendar year. Now, when we start looking at some of the other pairs, our major pairs, Great Britain, US, heavy support here down at this 139.80 area here. We've been hugging that VantagePoint 18-day predicted moving average for what it really does feel like a lifetime here. 140, basically when we're looking at this 140.40, we've closed 140.86. I do anticipate a move back down here. We have to wait and see how real money is going to analyze how basically that unemployment report shakes out. The unemployment report, again, in my respectful opinion, was pretty good, but they've all been pretty good, and nothing has helped the US dollar. So a little bit of Brexit fears here with this particular pair, but ultimately, in 2018, this pair is likely to move higher back towards that 150 area. Now, we could have a pullback first, but at least in the short term indicators here, we can see we've got a very clear, in my respectful opinion, it's a signal that's relatively clear. Our medium-term trend weakening against our longer-term trend, and a heavy support zone around 139.15. So I would continue to look to buy at that area. Maybe a little bit. We could see a little bit lower down around the 139 level, but this is, even if we push into this level, that's where the buyers are likely going to move back in. But the early warning sign is from VantagePoint that ultimately this pair is likely going higher sooner rather than later. Dollar yen here, guys, we've had a little bit of a push up here, but on the top of our particular channel here, I'll just remove this here so everybody can see, and I'll put our line back in. We've got a couple of swing tops in here that's showing resistance right up into this level here. We can, if I just bring this over, everybody will be able to see this very clearly. This high right around basically between 107.28 and 108, we have very, very heavy resistance. So only a clean, sustained break of 108 would take the pressure off the downside, but ultimately there is more money going into the yen than there is into the US dollar, regardless of what the equity markets do. They still continue to sell this lower. Now, we can see a very well-defined cross here with the medium term crossing the long term predicted difference down with the neural index. If we bring in our short term crossover from VantagePoint, it hasn't completed yet, but it's warning that we're losing momentum here. So selling into a rally anywhere around the 107.50. Our high for the day on Monday on VantagePoint is going to be 107.36. That's a reasonable area with about a 1% stop. Taking this pair, about 100 pip stop loss is what we would need to trade this particular pair. Now, with the Canadian dollar next week, we've had a breakout of this channel support zone here at 128. So 128 is really the area that comes into play. But the key vantage point level is 128.56. I would hold out for a potential short into this area because I think they're going to try and flush out trades on Monday and the real price will show itself on Tuesday. But right now it is a very, very mixed signal here from VantagePoint. We're likely going to retrace. We want to see if we can retrace back to 128.56, but we also want to see if we can continue to hold below 28. If we do continue to hold below 128, that's going to trigger a much bigger move, probably back into the 125 area. So keep a very close eye out for that one. Aussie US and New Zealand US. Aussie US is basically taking what's called a dead cat bounce. It's really not going anywhere fast. Banging up against this VantagePoint critical predicted moving average, 18 days, 77.13. Selling into that area has worked, but ultimately I feel that this pair in the next month or so is going to reverse considerably higher, back probably up into this zone, up in around this 79 area, but that could take a few weeks, guys. But for now, we've got very heavy support down into the 76 level. But looking at these indicators from VantagePoint, the predicted differences, they're just basically sideways. So we need to let this thing break into a direction one way or the other before we can really start trading this. New Zealand US, basically, guys, a very similar trade to Aussie US, almost identical. The Aussie or the New Zealand, the Kiwi, a little bit stronger, but we are holding that key level here also on VantagePoint that's coming in at or about the 72.58 area, closing right on that level here. So if commodities turn higher, oil, gold, everything turns higher, then and even if the equities turn higher with it, that's going to help this particular pair. So we've got a choppy couple of days. A choppy day on Monday is what we should expect from the market after the non-farm payroll as the market digests that number. We have the Trump-China tariff war still raging, so we'll see if that settles down a bit. But definitely a choppy start to the week. So with that said, this is the Forex Weekly Outlook for the week of April the 9th, 2018.